Look at this chart. Gold is going straight up, and not in a healthy, markets doing market things kind of way, but as someone chugged a Four Loko and listened to a David Goggins podcast at 3 a.m. kind of way. Because here's the thing. Over the last 40 years, gold has averaged about a 6 to 7% annual return. Respectable. Boring. The financial equivalent of a beige couch. But over the last 5 years, gold has been averaging nearly 20% per year. That's not normal. So either we are not living in a normal, functioning world, or I have dramatically underestimated the emotional attachment humans have to shiny rocks. Either way, gold is probably hitting another all-time high as I record this. And it gets even weirder, because nobody can actually agree on why this is happening. Not traders, not economists, not analysts, not even that one guy on Reddit who spends 8 hours a day explaining why the future is precious metals and canned beans. Everyone has a theory, but nobody has an answer. Because one thing is clear, something big is happening under the surface. What's supposed to be a boring asset class is now putting up Wilt Chamberlain numbers. And today, we're going to figure out why. Let's start by debunking the obvious explanation. Inflation. Yes, inflation sucks. Rent went up. Groceries went up. Even fast food got so expensive it feels like KFC was hired by private equity. But gold isn't rising because of inflation, at least not the way most people think. If it were, gold would have exploded back in 2021 when CPI was doing its best impression of a meme coin after an Elon tweet. It didn't. It barely moved. Gold has only started gaining serious momentum recently. So inflation is part of the story, but it's not the answer. The real reason is scarier. Foreign countries are quietly losing faith in the US dollar. And when I say quietly, I mean the same way someone quietly deletes all their couple photos before announcing a breakup. The signs are always there, people just ignored them. For nearly 80 years, the US dollar has been the global reserve currency. Central banks hold it to facilitate trade and reduce risk. But that's changing. They're not dumping the dollar. That would be obvious and panic-inducing. They're doing something sneakier. They're diversifying, slowly and strategically, like tiptoeing out of a room without waking the sleeping dragon. 20 years ago, over 70% of global reserves were held in dollars. Today, about 58%. That 12-point drop doesn't sound dramatic until you realize we're talking about trillions of dollars. It's central banks saying, we still like you, but we're exploring other options. And those options aren't the euro. They aren't the yen. It's gold. Gold is the side piece, the monetary prenup, the just in case things get weird asset. And central banks are buying it at a record pace. For the third year in a row, they've bought over 1,000 tons per year, more than double the previous decade's average. 2024 was the largest gold buying year in history. And it's not slowing down. Over 40% of central banks plan to buy more gold this decade. 95% expect their gold holdings to rise in the next year. This isn't a fad. This is institutional anxiety, nervousness about U.S. debt, long-term inflation risk, and over-reliance on one financial system. Now, to be clear, the dollar isn't collapsing tomorrow. That narrative usually comes from a guy holding 73 ounces of silver in his mom's basement. The dollar is still dominant. But we're shifting from blind faith to conditional trust. And that matters. Because gold doesn't rise when people are optimistic. When markets feel safe, gold is boring. When stability is high, gold gets ignored. Gold only wakes up when confidence starts to crack. What we're seeing isn't panic buying. It's preemptive positioning. But here's what makes this so confusing. Stocks are near all-time highs. AI stocks are priced like they've already replaced half the workforce. Risk-on assets are partying like it's 2 a.m. in Miami. And at the same time, gold is also at all-time highs. That's not normal. Historically, markets pick a lane. Either optimism wins or fear does. Right now, everything is sending a different signal. Stocks scream optimism. Gold screams concern. Bonds scream confusion. It's mixed signals on steroids. More mixed than someone who says, I'm not looking for anything serious, and then asks what your love language is. So let me know what you think in the comments. Because markets don't behave like this when the future is clear. And that's why this gold move matters. Not because it's shiny, and also not because it's breaking records, but because of who is buying it and why. The biggest players in the global financial system are quietly repositioning, and almost nobody is talking about it. That's something worth paying attention to.